Today, market participants found out that inflation in the United States has been losing its grip, declining to more favorable rates for the U.S. economy. In turn, financial markets are regaining their appetite for risk. The Federal Reserve is widely expected to take the long-awaited decision to suspend the cycle of aggressive monetary tightening. As a result, the US dollar is losing ground across the board. What other significant events in the traders' calendar could influence trajectories of popular currency pairs? Let's discuss this on our InstaForex TV channel. Investors are also keeping close tabs on consumer inflation in China. The second-largest global economy is displaying signs of an economic slowdown. Extremely low inflation rates are increasing market concerns. In the previous report, the CPI sank to the weakest rate since September 2021. Investors are braced for a lower CPI in April, so demand for risky assets is likely to go down tomorrow. The Australian dollar, which is known as the barometer of the risk-on mood in the Asia-Pacific trade, is expected to come under pressure. Inflation acceleration within the scope of target rates is a rare phenomenon under current unstable and uncertain economic conditions. Every central bank should select a unique key to the solution. For instance, Japan notched up its goal by maintaining the ongoing course of ultra-loose monetary policy, and the US opted to bring inflation down by aggressive monetary tightening. At the same time, the monetary authorities in the UK have not been able to achieve even a modest progress yet. Annual inflation has firmly stuck at the rate above 10%, though the Bank of England has already raised the key interest rate to the highest point since 2008. The regulator still signals its intention to go ahead with more rate hikes on the back of stubborn inflation. Analysts are 100% sure that the Monetary Policy Committee will increase the key interest rate by another 25 basis points at the policy meeting on May 11. Meanwhile, the pound sterling is actively advancing in anticipation of this event. On a Thursday, investors will get to know trends in factory inflation in the United States. The PPI could shed light on a further trend in consumer inflation. The forecast puzzle market participants. The PPI is expected to rebound by 0.3% in April from a month ago, though the annual factory inflation could have slowed down to 2.5%. The question is still open: what metric will be given priority? On a Friday, traders will be riveted to the news from the UK, in particular the flash GDP for the first quarter of 2023. Under the conditions of a high inflation and expensive loans, the British economy is apparently going through a challenge. Experts suppose that the national economic output could have edged up by a minor 0.2%. Importantly, the Bank of England has already recognized a recession, but the statistics still do not allow analysts to draw their pessimistic conclusion. You are aware that a recession is acknowledged officially when GDP logs a negative value for a second quarter straight. The British economy seems to be more resilient than the central bank reckons. In the late New York session on Friday, the US will release a report which could give a clue to economic conditions in the United States. Market participants will find the information on a consumer sentiment. It's a common knowledge that consumer activity is a driving force for the US economy. Hence, consumer sentiment is one of the crucial metrics exposing trends in the top global economy. According to the forecast, consumers maintain cautious sentiment due to elevated prices and the high borrowing costs. Besides, 4 regional banks in the United States went bankrupt recently. Such events dent optimism among consumers, and the US dollar is likely to close this trading week with sell-offs. How will going to be in the short term in financial markets, we will definitely tell you in our news releases. Subscribe to our channel and follow news with us. See you soon.